Hi friend, this is Courage from Trading with Tan. In this video, I'm going to give you two very simple but very effective ways that you can use support and resistance and maximize your winning probability. So in other words, this might be the only support and resistance video that you will ever need. So there are many tutorials out there that teaches you to trade support and resistance by just looking at these major levels that the market has been moving on, right? But what do you do when the market is moving like this and below here you don't see where your support and resistance is? So the best way is to look at the market and see where is my market going. In this case, you can see I have a lot of bull candles here showing that the market is going to the upside direction. So where is the best support and resistance for this market? So what I do is I just mark out the level where the candle is. So in this case, you can see the candle closes here. This is where the market is at, and from there what I need to do is I need to zoom out the chart, and then I will try to look back to the left and see where the market have been reacting to before. So if I zoom out, you're going to see that the market looks like this. This market have got a level where it have been reacting to. So this red line here, this rectangle, is the level that the market have been reacting to. As you can see, this market have reacted to once, twice, 3 times, right? So if this market continues going up, I know that in this case the market will likely react on this level, because this level have been acting as resistance here. It can still act as resistance. And if I zoom out again, you're going to see that later on the market actually got to that level and was rejected again, and then it went downward. Why? Because this level was so strong, it have been rejecting the market to go up. So when the market continues going up to this zone managed to reverse the market. So let me show you another example of how this happens again. So look at this market. You're going to see that we are in a strong downtrend here, but we want to know where is the best support and or resistance. So the first thing is to mark where the price is at the moment. And so what you do that, you zoom out the charts and then you look to the left, right? So in this case, I look to the left and I'm going to see that if I look to the left, there is another zones here which the market is likely to come to, right? So I will mark out those zones and you're going to see that I have 2 zones here. This one, the market have reacted to this level 1 time, 2 times, 3 times, 4 times here, 5 times, 6 times. So you can see this is a very strong level for the market, right? Also, we have another level here that have been tested multiple times. So if the market comes back here, it will either reverse from this point and go up, or it will either come to this point and reverse to go up again, right? Because these are the levels that are actually likely to reverse the market at this point. We have another level here, but that's where the market is at. So if you want to trade here, you would be looking for conformations, which I'm going to teach you later in this video, how to combine those conformations with these levels that I'm showing you so that you can get high probability trades. So in this case, you can see the market went all the way down, right? In this first zone, the market reacted and created an indecision candle which have long wicks both to the upside and to the downside, but it didn't turn at that point and reverse. What it did is it went down to the lower zone, and on the lower zone you can see the market is again reacting to this zone by creating a hammer candle, if you can see that, right? Once the market created the hammer candle, you can see that later on the market moved up and reversed on from this zone all the way up, right? So the reason why the market reacted to this zone here is that traders and everyone who is in the market, they know that these levels are strong levels and buyers will jump in at this point. If there were sellers who were in control and in profit with these red candles here, these sellers would likely take profit when the market hits these zones, because people know that these zones might reverse the market. So if you are in a sell trade, it will be normal for you to close your trades here, because you think that this zone here will reject the market and eat up your profits, right? Let me show you something about the trend. I always say this: if the market is in a downtrend, it is likely that you are going to see an impulsive move, a pullback, an impulsive move, a pullback, an impulsive move, a pullback, right? And these pullbacks here are very important to understand how they work, right? We have three types of pullback that we have in the market. First of all, let's say we are in an uptrend. We can have an impulsive move, a pullback, an impulsive move. This pullback that comes here will either come to this point, maybe this point here, and then goes up again. It doesn't come all the way down. And this type of pullback, we call it the shallow pullback. This shallow pullback shows you that the market is very strong in momentum. So I have another videos that will tell you how to trade those. So stick around, I will throw those videos towards the end. So this shallow pullback shows you that the market is likely to continue to the upside, right? But with a very maximum momentum, right? And then we have another type of a pullback which comes back to this previous zone here. This is one of the most reliable pullbacks, and in this video this is what I'm gonna show you, right? So this pullback here should come back into this zone which was a higher high before. So this zone was a higher high before, and now it becomes possible lower high because this was support and now it's likely to turn into resistance. Forgive my drawing right there. And then we might have the market going straight to the upside, right? So this type of a pullback is very common, and it is the one that I'm going to show you. But we have the third one, which is called, so this one we call it a medium pullback. Then we have the third one, which is called the deep pullback. This pullback can come to this zone right here, this previous lower high here. You can see that this pullback is going to come to this point maybe and go to the upside again, right? Doesn't mean there's no other pullbacks that comes here or in between here, but these are the three most common pullbacks that you are going to find. And if you master how to trade those, you can get maximum results with support and resistance, right? Now when the market is looking like this, if I want to follow the trend, right, for me to follow the trend right here, I know that the first thing that I'm seeing here is a lower low, a pullback, an impulsive move, and this pullback here should come back into my previous lower low here, which is likely going to create a medium pullback and the market to reverse to the upside. So the zone that I'm gonna mark here, if I want to follow the trend, I want to wait for the market to make a small pullback going back, and then once it makes that small pullback, I'm gonna mark my major level, which is right here. And if the market comes back into this major level, the chances of the market turning from there going to the downside are very high, which is exactly what happened in this case right here. So here's another example. First of all, you need to understand how the market works, right? So the trend works like this. If you have an impulsive move, a pullback, an impulsive move, and again, as I said, the market, when it reverses, it might come back into this zone. In this case, you can see that if I draw this zone as my possible support zone, there's chances that the market will come back into this zone right here. Before we buy here, right, before we buy and go to the upside, we need to wait for some kind of confirmation, and those confirmation is what I'm gonna teach you next in this video. So be careful when trading these zones if you don't have confirmations, because the chances of you getting maximum results here can be limited if you only use support and resistance. But you can maximize those chances but by also waiting for confirmations on these major levels before you place your trade. Let me show you how you do that. The best way is using what are called candlestick patterns, right? If you don't know anything about this, then you need to go into the description of this video and get a free forex trading course which teaches you all the technical analysis and all the basics of forex trading, and it is completely free. So check out the first link in the description of this video. Now let's move on to how to use these candlestick patterns, right? Now for candlestick patterns, you might be thinking, why am I putting these two here? These are the two most reliable candlestick patterns to trade in the support or resistance zones, right? So the first one here is called the bullish and bearish engulfing candle. So the way that this is created, just for a brief for those who don't know how it works, this one opens, let's say this one opens here and closes here. And for it to close here, it shows that prices were going down. And then this one opens here and closes above here, showing you that the price have reversed. So if this happens on a support level, let's say the market was coming from the downside, and then at this is our support zone here, we see something like this, we are likely to know that this price change in direction can push prices go to the upside as soon as possible. On the other side, if you look at this candle right here, so this one you've got two categories. I'm going to show you two types of these, and then for this shows you that the market opened here, goes all the way down to create the low here, and then pulls back up to close above, right? So if we were in the market, and if the market was coming from the upside and at the support zone, you see this candle with a long wick rejection, which is called the hammer candle, we are going to be likely to see the market reversing. So let me show you how to use this in the real market. So first example is here. We said if you want to trade a reversal, the first thing that you do is look where the market is, right? The market is right here at this point, but where is the next point where the market is likely to reverse? You look up and you look to the left, right? You look up and you look to the left, because this is going up, right? I'm going to show you the example where it is going down, but this is going up, and you look up, you look to the left. Where is the zone where the market is likely to reverse on, right? That zone is right here. You can see that here. You can see, you look to the left, you see the market have reversed here and make a big move to the downside. So now if the market comes back to this zone, or the market is coming back to that zone, but I'm gonna, when the market reaches this zone, the first thing that I'm gonna do is I'm not just gonna go and jump into the market. I'm gonna wait for a confirmation. A confirmation should be a candlestick pattern that shows me a potential reversal, right? For example, in this case, this candle opens here and it closes here, because this is a bearish engulfing candle, right? The first one. The second one opens here, closes down, showing me that the market have changed the direction. Here it was going up and now it's going down. You can see from here to here the market was always going up, and then in this case it shows me that it have likely changed the direction. And also I know this is a very strong resistance zone, because it have been tested here before. So now likely the market might reverse maybe up to this point. So this is the first thing that you need to look for. When the market reaches a strong level like this, wait for the confirmation, and then after that you can see that if you get a trade here, the market was likely to just go to the downside. So in this case, you could have placed your trade right here, a sell trade, your stop loss above this zone, of course, because if the market pulls above here and breaks this zone, maybe the trend is continuing. Because remember, I said we have an impulsive move, a pullback, and for us to confirm that this is an uptrend, we want to see this level being broken. So if the market goes all the way up and break this level, so it means the uptrend is likely continuing. So in this case, if the market goes all the way and closes above this zone, then we are likely continuing. But in this case, it didn't do that. So we put a stop loss here, and then we take profit down at this point. I'm going to show you towards the end of the video how to place your stop losses and take profits using these zones again. So now here is another example. If you look at this, you can see that this market has been going down for a long period of time, and you can see that here it was creating green candles trying to reverse, green candles trying to reverse. But maybe the reason why it wasn't reversing is because if you look to the left, there wasn't any strong level of support or resistance, right? Clearly you can see that. But so how do we know when the market is likely to reverse next, right? So the first thing that we are going to do is mark out where our zone is. So since this market is coming from the upside, our reversals is when the market reverses to the upside. So we're going to look down and look to the left, zoom out our charts, and we are going to see where we are and what is the likely position for us to get a reversal. Now we zoom out this chart. This is the same chart, and you can see if you look down and to the left, the zones that we have here that are likely to reverse the market is this zone right here, and we have this zone and this zone. So these three zones, if you look here, the market wasn't reversing here because there wasn't any zone to reject here. But here we can have this zone which rejected once, 2 times, 3 times, right? We also have this zone which have been rejecting the market multiple times. We also have this strong zone which have been rejecting the market multiple times. So this is where the market is likely to reject. So if we want to trade and whatever we want to do, we are going to do it in these zones right here. So Now you can see that the market moved to the downside and it reaches this first zone. And then on this first zone, what do you see at this point right here? At this point, you can see that the market reaches this strong zone right here, and then it creates a bullish engulfing candle. What is a bullish engulfing candle? We see the first candle going down here, going to the downside because it's a sell candle, and the next one opens here, closes way above the opening price. So here is a good rejection candlestick, and then we are likely to get the market going to the upside. It doesn't always go like that, but you are increasing your chances of making money. Here you can see the market managed to go all the way up and you maximize your chances. So what is the key takeaway from this? What we are just saying here in few words is that if the market moved like this and reverses, moved again, reverses, and now is going up, if you want to place a reversal trade, you are going to look up and look. If the market is going up, you look up, you look to the left, and you mark this zone where the market reacted to before. If it comes back to this zone at this point, look for a candlestick pattern that shows you a potential reversal before you sell your trade. That's how you maximize your winning probability. This is market reversal, and I know most traders doesn't like to reverse against the trend. So let me show you how to use this again in a trending market. So in a trending market, we said we have the market which is going up, higher highs and lower highs if you are trending up. So we want to see something like this, these levels being broken, right? And we said the market might reverse into one of these zones before it pushes up, right? So let's see what happens in this case right here. So if we look at this market, we can see the market was moving up and creates a pullback. It moves up again, creates a pullback, moves up again, creates a pullback, right? So the next thing that the market can do is break above and go all the way up right here, and it pulls back into what, right? What is the zone that it pulls back into? If you look at this, if I draw a zone, you're going to see there's a zone here, because this is what rejected the market before. And if the market pulls up, comes back to this zone, it will like reject again. So on this zone, what do you see here? If you can say this, you can see that this is again the bullish engulfing candle, but this bullish engulfing candle is going in the same direction of the market. So in the previous example, we were looking when this is going against the market, but here we are going up in an uptrend, and also we see bullish engulfing candle, which increases your chances of winning, which happens again. Let's say you buy here, the market would go up, so you would buy here and you would place your stop loss below this zone and your take profit above, maybe 1 to 2, 1 to 3, whatever you want to do on your risk to reward ratio. And then in this case, the market moves all the way up and made a winning trade. Here's another example. The market is in an uptrend, and how do you know that this is an uptrend? You can see the market is moving up like this, makes a pullback, breaks above, right? It makes a deep pullback that comes back to this zone, and again moves up, breaking above this zone. Now it's pulling back into this zone right here. This is the zone that we are interested in. So what do we do as traders? The first thing, we mark out our zone as a rectangle, and we are waiting for the market to come back into the zone. But now, can we buy at this point where the market is? Because the market has pulled back into this zone, but can we buy? If you were paying attention, you would say, no, we don't buy yet. Why? Because we don't have confirmation. We need confirmation in these zones. So what is our best confirmation? Candlestick patterns, right? So we are looking for a candlestick pattern. There's no candlestick pattern here that shows you a potential reversal. So we are going to zoom in, and then you can see that from this point, you can see this is where we were, right? So we didn't place a trade. We let the market comes back, and now in this zone, we are now looking to place a trade. Why? Because we have this candlestick pattern here, which is called the hammer candlestick. So the hammer have got a body which is above, way above the center line. So here, this candle, the center might be here. The body is above the center, and then we have a long wick to the downside. This long wick is showing you rejection, and this rejection is happening on our zone where the market have reacted to before. So what is likely to happen is the market will go up. So at this point, you would buy and you put your stop loss below. So your stop loss below this zone, and then you take profit way above here and expect prices to go up. I'm not saying it's gonna happen 100% of the time, but you can see that this zone managed to hold the price for a long period of time, and it was playing with your emotions here, which is what trading does to you as a trader. You need to be strong, and then later on the market went all the way up to hit up your take profits. So this was a very good trade. Let's take a look at this example that we talked about. We said we have the market moving up and we have this zone. The market have come back into this zone and we are likely to place our trades. How do we place our stop losses? Here's what you do. If you are selling here, you want to do a trade which looks something like this. And here is why I'm saying that. So if you sell right here, if you sell at this point, so if you sell here, right, you sell, and then you take, what happens to your stop loss is you want to make sure that you place your stop loss at a level where you say, if the market goes above this level, my trend have already changed direction. So here's the example. If the market breaks above this zone, as I said before, that means this was our higher high. That means the trend is likely to continue. As we said, if the market is moving, the trend will look like this. We are just looking for the market to break above this higher high to confirm that this is a trend. And then here you can see we are confirming with this higher high again. If the impulsive move break above, this higher high shows you that we have a new higher high. So it's now, the trend might continue and it might even continue over and over again. So in this case, we have our impulsive move, we have our pullback, we have our market trying to break into a new impulsive move here. If the market haven't broken above this higher high of the first impulsive move here, we are not yet in an uptrend. But if the market goes up and closes above here, we might be continuing this trend. So we want to stop loss and we want to say, okay, we are likely wrong at this point. So we want the market to close and we want to take a loss and moves to the next one, right? But for the take profit also, I said, what is the likely zone for the market to reverse? You look down, because this is a sell trade, and you look down and you look to the left. So here we have two take profit zones that we can put here. First one is here. The market has been rejecting this zone, one here, another two here. It's not perfect, but it's a zone. Then we have also this zone where the market have rejected multiple times here. So these are the two zones where the market will be likely to. So for the take profit, I would prefer to take the first zone that is here, because when the market comes back here, it might reject again and start going to the upside. So that's how you put your take profit and your stop losses, right? In this case, you can see we already know that the market moved to the downside. If you want to learn more about trading, if you want to get more free strategies, tips, and all the ways of making money in the forex market, make sure you hit the subscribe button and you look down in the description. There's a link to get a free forex trading course that I created that is gonna help you to get started and understand all the basics and make money as a beginner trader. Thank you for watching, and I will see you in the next one.